contrarian investing and trading, and also the importance of sticking to a plan. So contrarian investing and trading is really the most optimal way to trade and look at the markets. And that's because usually the herd is wrong, right? The herd loses money. The herd feels safest when they're the least safe, when they're about to get sheared. And they feel the most fearful when it's the most safe to enter the market. So this is a little bit of a different, way than what we're used to. And this is especially important for people who, are new to the market. And generally, it's very easy for those people to feel like they need to look around to other people. Maybe they're on Twitter or on social media. Obviously, you're looking for different information if you're watching this video. And, it's easy to fall into the trap of thinking that everybody knows more than you do. But really, nobody knows more than you do. But there are certain principles that hold true over time in the markets. And one of those is that, the herd is rarely ever right. They are occasionally right, but, on a probabilistic basis, they're, always going to be more likely to be wrong than they are to be right. And it's important not to get swept up in that, to both sides, right? Generally, people fall into the categories of, being bullish or bearish, and they'll naturally be a contrarian in either one of those scenarios when the herd goes against them. But it takes a special kind of person to be a contrarian in both scenarios when the herd is flip-flopping around in different directions. And, I think the most critical part of what it means to be a contrarian is to have a plan outlined for, what type of actions you're going to take in the market, and what type of variables you're going to act on when they do come to pass. And sometimes those things are hard to forecast far out, but you can create a plan that has as many if-then scenarios as possible. So if X happens, then Y. And you can write that down, and the more if-then scenarios you create, the more you incorporate randomness into your plan, and the more versatile it becomes, and the more you're able to react to those different scenarios that play out. But the importance of having a plan is huge, because you can always go back to that plan and look at that plan, and even if the whole market thinks that a certain trade or a certain idea is just not possible because of whatever is the current sentiment or narrative at the time, you have your plan written down and you can operate off that plan. So it's just, these type of things are very, very important guidelines, to follow over the course of a trading career. And I think one key component of that as well is the idea of bankroll management. You never want to get too committed to any single trading idea, and you always want to have some available cash to take advantage of the different scenarios that could happen. But I think if you practice successful bankroll management in combination with having a plan with a lot of different variables outlined, then you'll be in the best position to take advantage, because realistically the market isn't going to let everyone in easily right before the trade starts to trend and signal to the market that everything's good, everything's okay, just get in, take the trade. Obviously that's not going to happen. So we've gone over the tools that are necessary to act on contrarian trading ideas and contrarian investing ideas. But it takes a certain type of person to act that way. You need to be a certain type of person who doesn't rely on other people for confidence or validation. Somebody who is not part of the crowd, so to speak. Somebody who is self-confident and yet not arrogant, not proud, not delusional. Someone who has a high degree of self-awareness and humility, but also an extreme degree of self-confidence, which is a very strange combo. But it does exist, and those type of people are, separate themselves from the crowd, and they can act in this manner. And also, I would also say that if you want to have some incorporation of fundamental principles, and that being, if you're caught in a market downturn, if you're long on whatever asset you're long into that downturn, and the whole market's short, and you have a trade idea that suggests you go long, it does help to have a position in some type of quality asset, and whatever that means to you, right? Because when the whole market is asking, saying that your trade idea is garbage, and that that nobody would ever, you're not a real trader if you take that trade, and that because of the overarching narratives that exist in the market, that your trade is never going to work, and using absolute terms like that, it does help to have an allocation to quality assets, right? Because in those scenarios, you're going to have to ask yourself the questions. Your mind is going to ask you the questions of why you're holding certain assets in your portfolio, and you have to have answers for those questions, right? Especially, when the market looks terrible, so to speak, because, again, it does take a certain type of person to engage in contrarian trading and investing, but at the end of the day, they are human too. They are operating on the same human hardwiring system, and any hack or trick you can use to short circuit that system is going to be incredibly beneficial. And that's why I think in times of market extremities and extreme volatile movements, it really helps to journal those, both to the upside and to the downside, and you can go revisit that. So for example, we're currently in a very protracted bear market, that began in November of 2021, and it's almost, for all intents and purposes, almost coming in a year. It's been 3 quarters, but it's like, for example, if we journal the different feelings, the different experiences that we have now, then you can sort of capture those emotions in time. And then the next time the market does go parabolic, and the contrarian trade there is to take profit and to not necessarily open a major short position, but to reduce long exposure and to start going risk off into the parabola, which is going to be a contrarian idea, because the crowd at that time will be entering at that point and getting euphoric and greedy. So that being risk off in that scenario will be a contrarian trade. But sometimes in that moment, it would help to have those experiences from the bear market, and the depths of the bear market, and your experiences and your emotions at that time. And then when you revisit that, you can sort of unlock that emotion. You can go right back to that place, and tapping into that during a parabolic rise can help you to, it can help you disengage from the euphoria and the greed that anybody would be feeling at the time if they're long and the market's going parabolic. Anyway, these are just some tools that can be used. Again, it's going to be different for everybody, and it's hard to make a broad sweeping suggestion, but just creating some type of strategy to separate yourself from the herd and trade in a way that is somehow distinct from the crowd is going to, in my opinion, separate the average trader from the amazing trader. Anyway, I hope you guys like this video. If you do like this type of content, please make sure to just leave a like on the video, subscribe to the channel, and I'll catch you guys in the next video.